Hello and welcome to Trading Factory. Today I will show you one of the most effective indicator strategies I found on TradingView. This trading system is perfect for beginners as well as for advanced traders. It can produce a lot of high-quality signals per day. Also, it does not involve a bunch of complicated rules to be followed. You do not need any premium or paid indicators for this strategy. This technique works for Forex, cryptocurrencies, stocks, and any other market with a high level of liquidity. It performs well on shorter time frames such as 1 minute, 5 minutes, and 15 minutes. Traders, please click the like button on this video and subscribe to Trading Factory before I begin. My goal with this channel is to quickly transform you into a successful trader. Here are the steps to follow so that we can create this indicator configuration. First, open any chart on the TradingView platform. Next, go to the Indicators menu and look for the first indicator, Extreme Trend. Select this indicator, which was developed by Jyoti Prasad, and leave the settings alone. A straightforward indicator for buying and selling is the extreme tendency. In addition to these buy and sell triangles, this utility also includes a 200 exponential moving average that serves as a long-term trend confirmation indicator. We will use the extreme trend as our primary trend confirmation indicator. Add the CMMAC custom indicator to indicator number 2 and keep all of its settings at their default values. The CMMAC indicator is a better version of a standard moving average convergence-divergence indicator because it is MAC lines that change color whenever a cross occurs, making it much simpler to understand. Additionally, it has a middle level for the third indicator as well as a histogram that displays market momentum. Add a regular volume tool to the chart by searching for volume and choosing the technical sections indicator. Then, once this tool has been added, open its settings to activate the moving average. And make the duration 30. Having completed the preparation, let's learn the precise guidelines for initiating long and short trades. For a buy position, wait for the extreme trend indicator to print a blue triangle below the price bar. At the same time the signal is printed, the closing price must be greater than the 200 EMA. The second step is to look at the MACD indicator. The histogram must be green and the very last bullish cross must occur below the zero line. Finally, check the volume for sufficient bullish orders. The bar must be green. It also needs to break above the moving average. Put in a buy order at the price bar's close, lower your stop loss to the most recent swing low, and get out of a profitable transaction as soon as an orange triangle appears above the price bar. It's crucial to keep in mind that you can only close out a transaction if it is profitable. Let's look at another illustration. The closing price is above the 200 period moving average, which is a sign of an uptrend, and the extreme trend indicator finds this to be the best price to initiate a long trade. Observe the MACD icon as well. The current histogram is green, which indicates strong upward momentum, and the volume indicator supports the signal, so you place an order to buy at the end of the price bar and exit the trade at the sell signal. As you can see, the bullish cross on the MAC lines occurred below the zero level. Rules for short transactions are as follows. Firstly, wait for the indicator to print an orange triangle above the price bar. At the time this happens, the price must be closed below the 200 period moving average, confirming a downtrend. Secondly, check the MACD indicator. The histogram must be red. Also, the very recent bearish cross must occur above the zero line. Last but not least, confirm that there is significant bearish volume. To do this, the bar must be red and break above the moving average. Place a sell order at the candlestick's close if these criteria are met, and get out of a profitable short transaction as soon as a blue triangle appears. Glance at some more instances. Watch how the indicator determines the ideal price for placing a sell order. The price's position in relation to the EMA confirms the downtrend. The MAC shows a bearish cross. This cross must appear above the zero line to prevent entering an oversold market. Always keep in mind that if you don't abide by this guideline, your risk of entering the trade prematurely is very high. Check the volume as well. If you want to save yourself a lot of time, you can create alerts for this strategy. The way you can do that is by clicking on the alerts button at the top and selecting the X trend as a condition. The next step is to choose the type of signal. You can create two separate alerts, one for a buy and one for a sell signal. You will receive a notification each time the indicator issues a signal if you activate the alert once per bar close. Make sure all other requirements are satisfied before placing a trade. Okay, so now that you know the trading setup, let's actually do our backtest on a 5-minute time frame and see if the outcomes are reasonable or not. I just finished the backtesting, and these results have surprised me. Our win rate is 70% and the profits end up at 11%. I would also like to mention that these results will be different when trading live, so always try the strategy for yourself before using it. Guys, feel free to run back and forward testing on various markets and times to gauge how well it performs. If you want to see one of my other trading strategies I use when day trading, check this video right here, because this strategy works great on the every time frame you want. I'll see you guys next time.